Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracey Ryniec, and this week I'm joined by Dave Bartosiak. He's the editor of Zacks Momentum Trader and Home Run Investor, and he's also the host of the newly launched Zacks Live Trader, which is a weekly video service on YouTube where you can get all of his insights into how to trade options during earnings season. And since we're in earnings season, I thought this was a good time to get some of his secret tips on what you do and what he does to find the stocks that he's trading and how to go about trading the options once you get in there. So, Dave, welcome.
Thanks for having me.
Yeah, I thought this was interesting because, as you know, I know absolutely nothing about options. I've sat here, I had Kevin Matris on to do the whole options for beginners and explain what they are and how that all works.
Sure.
That was helpful. But I know you are actively trading them during the earnings season, like when the earnings reports come out.
Right.
And so that's a little bit different animal than just normal options trading.
Yeah, it is. And I like it. I almost feel like options are perfect for trading earnings because you have a clear time horizon because you know when the earnings report is going to be. And then you can limit your risk explicitly because you know how much money you're going to invest in the option. So those two parts of options trading are what really make it fantastic when you're talking about earnings. Because on the flip side, let's say you buy XYZ Corp, you buy 100 shares of it, right? And it's $10, you have $1,000 at risk. And then as it goes up, you make dollar for dollar, right? It going up. But an option on XYZ that expires after earnings at a $10 strike price might only cost you $1, right? So you clearly define your risk as $1 versus your risk being, $1 times 100. So it's $100,
right?
Versus having your risk being all the money that you have invested. So when people think that options are risky, right? They just kind of, people always throw that word out, right? Risky, without really understanding what risky means. So at least options allow you to define how risky you're going to be. So that's why I like them for earnings.
Okay. We're going to go through 7 tips on what to do to trade options during the earnings reports. And you're going to give some examples in there so people can kind of see how it works as we go along. So the first tip, this seems very basic, but again, for someone like me, this is a good thing to know, is how to find the right stocks, like finding the right stocks.
Yeah, because you want to make sure that you're trading a popular stock around earnings. You don't want to go to some obscure company because they're probably not going to have options or there's not going to be a lot of activity, volume, open interest in those options. So you got to make sure that you're playing the game, right? So the fun part about that is that you can go ahead and pick the most popular stocks that are out there that maybe you were hesitant to trade because they were so expensive. So Amazon, Google, Apple, Netflix, the really big names that everybody talks about. But, how many people out there want to buy 100 shares of Google, right? Or
Not
can
many.
buy 100 shares of Google, right? Yeah. So this way you can control the same amount of shares without having, $80,000,
right?
To throw out there.
Okay. So look for hot stocks, the big names. Tip number 2, you have get the dates right.
This is very important. Okay. Because as we know here at Zacks, right? Just because a company has reported every quarter, the second week of the month and after the market closes doesn't mean they're going to do it next quarter, right?
We just learned this about Alcoa.
Alcoa, exactly.
They were after the bell for forever. And then suddenly, wait, what's happening?
What were we going to do before the bell on Tuesday?
How strange.
Very strange. But it happens. Yeah. So you got to keep an eye on these things. And oftentimes websites, Zacks included, will have sort of the estimated earnings date, right? And so if you're looking at these way ahead of time, then you just see that estimated earnings date. You can't take that for granted. You have to go back and make sure as it gets closer to that date, you have the confirmed date that's
So
there.
how do you find the actual confirmed date? Is the best way to go to the company's website and see if they've said when it's going to be and like officially published it?
The absolute best is the company's website.
Okay.
Right. That's number one. That's not the easiest.
No.
Right. But that is the best, pretty much most surefire way, because that's from their investor relations department. So they're letting you know exactly what's going on.
Okay. And then we have here at Zacks.com, we have a earnings calendar. I find it's not that bad. The ones that actually say after market close, it'll say AMC or BMO next to them. Usually those are more of the confirmed names.
And I think they have like an asterisk too that will show if it's confirmed or not confirmed. I would still, even after seeing it's confirmed, go back to the company site, because it doesn't take much time. It's only going to take you a couple minutes to go ahead and double check. And just whatever it is, you do XYZ Corp investor relations, and then they all have a page. They have to, right? So you'll get hooked up.
Okay. Tip number 3 is read the earnings previews. What does that mean?
So unfortunately, not everybody can do how we do, where I dig up research reports on the company.
From the analysts?
From the analysts themselves, and read a few of them and get an earnings preview. There's, but you can find these, we publish earnings previews.
Yeah.
Eric does a video, and about, the 2-minute earnings preview.
Right.
And then you've recently started your video series with the charts, with the pricing consensus charts, which we'll get into a little bit later. But you basically want to be armed with information heading into the report. And what I try and get from this is not necessarily, Stifel feels this way, right? I want to get kind of the overall feel of analysts, and then decide whether or not I agree with that sort of underlying sentiment. Because that's how you can really find a lot of opportunities, is if all the analysts feel one way and you feel another, for a reason, not just, I have a gut feeling it's not going to work, right?
Yeah.
Because that typically doesn't work out. But if you really have, conviction one way or the other thing is you look for disagreement amongst the analysts, because if a few of the firms are arguing, then now you can think, okay, well, if there's not a clear-cut consensus on the street right now, that should lead to more volatility in this, because now there's a lot of people on both sides of the equation there. So that's you just want to have that heading in.
Okay. Tip number 4 is check out the trends with the price and consensus and the EPS charts. So what does that mean?
So this is the most underutilized chart here at Zacks, and the best chart here at Zacks, as far as I'm concerned, is the price consensus and EPS surprise chart.
Okay.
Because you can glean so much information just from one quick little chart. So on that chart, you have obviously the price of the stock, right? Then you have little arrows that indicate earnings beats or earnings misses.
Yes.
And then when you put your mouse over them, it'll show you how big the beat or the miss was.
So the green arrow up, just for people who've never seen this, means a beat.
Yep.
And the red arrow down means a miss.
A miss. And then the size or the length of the tail of the arrow corresponds with how big the beat or big the miss. But the most important part of this chart is actually the multicolored lines that represent the Zacks consensus estimate over different years.
Yeah.
Okay. And what you want to look at from there is what's been the pattern overall. So have these estimates been creeping up? Have they been going down? Okay. Because what tends to happen is, as long as the stock's valuation remains relatively the same, they should track with EPS. The stock price should track with EPS, because it's just a multiple of it anyway, right? So I look for trends in that, because that number, EPS numbers, tend to take a little longer to establish trends and to roll out of trends than just a stock price, right? Stock price could go all over the place based on whatever factor that day was happening. But these major underlying fundamental EPS trends don't really shift that quickly. And if they do, maybe you shouldn't mess around with that company, right?
Okay, so we were going to talk about like an example of what you do in this area using Google/Alphabet, as its official name is called now, Alphabet.
Right. So if you look at the Google chart, you see the differences. Well, you can see the gaps between each year and the multicolored lines. And those gaps represent growth.
Yeah, that's the earnings growth.
The
then.
earnings growth.
Okay.
So as long as you continue to see that sort of step up year over year, you should be comfortable with Google, right?
Okay.
As long as they're showing that. But the thing is, the minute that goes away, right, when that growth starts to slow down and that gap between the lines gets smaller, that's when you know there could be a problem in the future, and that could have an effect on the valuations.
Okay.
Right? So it's an easy visual to see whether or not this should be continuing in one direction or it looks like it may reverse.
Okay. What about the earnings surprise part? Talk about that a little bit more. Does it matter if they've, have a good earnings surprise record, if they've beaten 10 quarters in a row or something?
What tends to happen is you'll see companies that beat all the time because they're larger companies and their CEO and CFO do a great job of managing expectations for earnings. So, there's companies that just simply always beat and you never have to worry about them not beating, right? But because they always beat, the market doesn't care, right?
Okay.
Because they just expect to beat. So then those are the companies where, that frustrate people that are like, man, Nike, for example.
Yeah.
We beat on EPS, we beat on revenue, stock goes down.
Right.
Like, what is going on here? Even the guidance is good because the guidance isn't great, right? And they're so focused on that future guidance and they already price it into the stock. And then it doesn't come like, that's the frustrating part is you can't really gauge the guidance in these charts, only the EPS. And even though we are looking forward in these EPS estimates, it's just they're so finicky because it's like next quarter is what we're worried about.
Right.
Not necessarily the whole year number.
Okay, this gets to tip number 5 that you have, and that is to dive into the detailed estimates.
Yeah. And this goes more to the limitations of the Zacks rank really than anything. So if you're looking at a couple of stocks that are both the Zacks rank number 1 strong buy stocks, you can't just think that they're both great. Okay.
Okay.
Because you have to see how many analysts are there that are actually moving their estimates in a positive direction, and what really made this number go. And that's not something that the average person is going to pick up on because
Right.
they're not. I mean, you and I stare at these
We do.
all day, every day, and have seen 1,000 of them. So it's probably a lot easier for us and knowing the intricacies of the rank to say, okay, that's a strong one versus that's a weak one.
Yeah,
But
let's explain that a little bit more. So, for example, NVIDIA, we were talking about them prior to coming on the podcast. They have a lot of analysts that follow them. So I don't even know how many. It's over 10, isn't it?
I think they have 13 that we calculate.
Okay.
And then so if you look at that, we had 6 or 7 analysts that revised their EPS estimate to the upside for the current quarter, next quarter, current year, and next year. And nobody revised to the downside. So a big chunk of this, the Zacks rank is the agreement, right? So are all these analysts on the same page? So 6 for 6, 7 for 7, boom, 100% good, solid on agreement, right? And that makes a big chunk of the rank. And then the other thing is magnitude, upside, and surprise, right? But the agreement's a big part. So NVIDIA, you see 6 or 7 moving in one direction, that's solid. Now on the flip side, you see a company like we were talking about Compass Minerals, right? Smaller company. We have 3 analysts following it, and one of them increases their estimates.
Okay.
You're still going to get 100% agreement if nobody goes to the downside, right? Because there's just one person that's moving in either direction, 100% good. And then so that tends to push them closer to being a Zacks rank number 1. But if I'm looking at Compass Minerals and I'm looking at NVIDIA, which one of these is stronger to me? It's going to be NVIDIA because there's so many more people that are, adding to the story.
What about the stocks that only have one analyst on it? Should I just stay away from those?
I don't think
crazy.
I don't think that you should stay away from them. I think that you should base your decision on more than just the Zacks rank.
Okay.
So that's when going back to that EPS surprise chart or pricing consensus chart works, because then now you could visually see, okay, this one person, are they moving the estimates up kind of quarter over quarter, year over year? Then this is a good company that I want to be in. Versus if, there's just a recent addition. So it's easier to see on the chart where the EPS, the consensus will be kind of flat, and then it'll start to tick up a little bit, right?
Right.
But if you don't see growth, there's no big gaps between the lines, and there's just like a little tick at the end. That's how you know you got a weak one. So maybe that's not necessarily something you want to jump into head first.
Okay. Tip number 6, you have analyze volume-based charts.
Yeah. So
What does that mean?
this takes a little bit more. Here's a little bit more of the special sauce. So, part of the technical analysis side for me is I don't necessarily look at charts as telling me the future, right? I don't say, oh, there's a crossover here. Boom, we're definitely going to, this level on the chart and away we go. I look at it more of telling me where in the past there were areas of support and resistance that where prices were defended, right? Or got slapped down or bid or whatever it is. So what I do is I'll use like a volume at price indicator, which gives me horizontal bars coming across the screen that show where a ton of volume has happened for that stock. So the thinking is, okay, if a stock has had a lot of volume at an area above the current price action, that will likely be a target for the stock to go to, and will also be resistance because there's people who bought there in the past who have been underwater this whole time that might just say, okay, I'm break even, I'm going to dump it now. So it helps me to understand kind of the psychology of the existing participants in the market as I'm looking at the chart.
Okay. We were going to talk about Kansas City Southern because I wanted to talk about a railroad.
Yeah. No, so
because it seems like a lot of these are all the glamour stocks. We were just talking about NVIDIA and Alphabet and all of those.
Right.
But, I guess they have options on Kansas City Southern too, right?
Oh, sure.
Yeah.
Yeah.
So what's going on with them?
So looking at that chart, there's a thick band of volume at $91, and then there's another one at $97. Now the stock's at 96 and change right now. So it's essentially running into resistance here, right at this sort of $97 level. And then obviously there's, the support down at 91. So if I'm looking to put together a play on something like Kansas Southern, what I'm doing is I'm taking that $91 level, and that might be my floor on that stock. So then I can adjust my options accordingly. So if I'm bearish on the stock, maybe that's the kind of the tail end that I think it's going to go to. So if I were setting up some sort of option spread, that might be the area where I'm selling the options into.
Okay. And your 7th and final tip is to dig into the options chain.
Yeah.
Kind of sounds like what you were just talking about. Is that right?
Close. With this one, it's more specific to the actual contract that's taking place.
Okay.
So it's funny because you'd think I would start this and it'd be step 1, how to read this options chain, right?
Right.
But what people need to realize is that if I'm on the show and I do it for 15, 20 minutes, and it looks like we just do it for 15 or 20 minutes, it's not, right? There's a couple hours that happen of prep time heading into that thing so that we know what we're talking about and we're selecting these for a reason. So basically, we're making it look easier than it is, right? Okay. And even coming here to step 7 and just saying, oh, step 7, dig in the options
so
chain.
Easy.
That makes it, that's a lot easier than it was. But we could seriously do 3 hours just on the options chain, right? But essentially what I like to do is I'll look at, so let's say the company is reporting.
You were going to talk about
Thursday.
Delta on this one.
So Delta, so today's Tuesday, right? So Delta is, I think, is it either after the market closes tomorrow or it's before the market closes or opens on Thursday.
Yeah.
It's all running together.
Soon. I know.
I'll figure it. I have my notes at my
Thursday.
desk. I'll figure it. It could be Thursday after.
I think it was.
Too. Or it could be Thursday after. On the Thursday before. Anyway, whatever, we'll figure it out.
Yeah.
But I do know that I'm going to talk about it.
This is number 2.
Right?
Get the dates right.
Right. Exactly. Exactly. Before I go in there, I'll have that date right. So anyway, so what I'll do is I'll go out to the nearest contract after that earnings report. So they have weekly options on Delta. So they have an option that's going to expire on the 14th. So I look at the call and the put that are closest to where the stock is trading. So the at the money call and the at the money put. I add them together and divide that strike price. And that gives me a rough guesstimate of the implied volatility of the move. So that's how much of a move the options market is guessing that stock is going to take after earnings, right?
Okay.
It's an oversimplification of it.
Right.
Yes, I understand.
That's why I need to watch whatever you're doing on the videos.
Well, even when I do that, I try not to get too much of the nitty gritty. And trust me, there are plenty of calculations for that, right?
Okay.
This is just the easy kind of back of the bar napkin way to calculate it, right? Just boom, there it is.
Yeah.
Okay. So that's a very important number because that tells you sort of what the options market is pricing in for the move on earnings. Then I just kind of eyeball and look at strike prices that have lots of open interest because that's the actual amount of contracts that are basically out there. So that's like the liquidity. Okay. So you want to make sure that there's plenty of players in the game so that you can get in, you can get out, you can do whatever you need to do. You don't want to go and buy options on a stock that, there's no open interest on because A, you won't be able to find as many, contracts as you want. And B, there's not enough liquidity. So you could get stuck and, a market maker just come in and give you a terrible price on the way out and the way in, and you just don't make any money. So that's very important. And then then volume too, which is just how many contracts are traded that day. So you'll see, the more popular names will have thousands and thousands of contracts of open interest and volume on a day. Whereas some of the lesser known ones will only have a handful, right? So you really want to still gravitate towards, and that's part of the reason why we want these more popular names,
right?
Because we want to make sure there's liquidity in that market. So what I do sometimes, even yesterday, I was looking at an options contract for October, and there wasn't that much interest in it. But then I went out to November, and there was a lot more. So I went, well, I would rather buy a little bit more time, be safe where there's more liquidity, than get stuck in a situation where I get trapped. So just kind of gravitate towards the liquidity and the open interest is kind of so once you've done all that, then you're ready to pull the trigger on whatever strategy you might have.
Right. Okay.
And then coming up with the actual strategies based on these inputs, again, is a whole nother ball game.
Right. That's we talked a little bit about that. I did with Kevin Matris, but options for beginners. That's
right.
What we covered in there. So yeah, people can check that out. Okay, so let's go over all the tips again. So number 1, I have to find the right stocks. Number 2, I get the dates right, and we already saw how important that is. Number 3, read various earnings previews, kind of figure out where all the analysts are, if they're in agreement or not. Number 4, check out the trends with that price and consensus and that earnings surprise chart. That's all in one chart on Zacks.com. That'll give you some good information there. And number 5, dig into the detailed estimates, whether or not the analysts are raising or lowering or changing going into this. Number 6, analyze the volume-based charts, see what's going on. Number 7, dig into the options chain to make sure you have liquidity and you don't get stuck in it and you can get in and out. And then you're ready to actually do the trading.
Right. Then you're ready to make a move.
Okay.
Based on these inputs.
Wow. That seems pretty complicated.
But yeah, well.
Yeah, I guess.
We make it look easy though.
Yeah, I know. Apparently. But no pain, no gain, I guess.
That's
you
right.
got to put the time and effort in.
Yep. And it's not that hard once you get used to it.
Okay.
It's just a different, it's a different sort of animal, and people think it's so exotic, right? Like, oh, these options are so different.
Well, that's what I was.
It's not that much different,
Okay.
It's when you're setting up these options trades, it's the same way that you analyze a stock, and then you're just treating it a little differently, right? If I was buying a stock,
you would look at all that.
You'd pretty much do most of this anyway, right?
Mm-hmm. That's true.
But the one difference here is now we're looking at the actual options chain and seeing how that. So it's not. Some people think that it's like we start with the options and then that kind of informs our decision. But no, that's kind of the last part. Once all the groundwork has already been laid.
Okay. Will you be covering any of these on the Zacks Live Trader that we talked about? So you are going to cover Delta, aren't you?
So today will be Delta.
Okay. And then we talked about Google. You may or may not cover that.
I will probably do Google. I
think
can't remember if I did Google last time.
I don't know. I think you've covered NVIDIA in the past.
Certainly
haven't you?
covered
Yeah.
it. NVIDIA is one of my favorites.
Yeah, I know. It's that video game thing.
It totally is.
I know. Compass Minerals, they're like a smaller one. You wouldn't normally cover them, would you?
No. You will not see that.
Yeah, I didn't think so.
In Live Trader.
Okay. And then the railroads. Have you ever done a railroad?
I just did CSX yesterday.
That's right.
Yeah.
Okay.
I'm pretty bearish on CSX, actually.
All right. Well, yeah. They have some issues right now, some of the rails.
Well, and the reason why I was so bearish on them is the pricing consensus chart. The price has been going straight up and the consensus down or sideways.
Yeah.
So it's like, why is this happening? Why is there this explosion in valuation?
Okay. So that would be a good one to go check out. You can already find that on YouTube, is your options strategies on CSX. All right. I'll put a link to that in the article for this podcast too.
Cool.
So
the Zacks.com/live trader.
Okay. That's where I can find that.
That's where you can find that's the Live Trader YouTube, and there's free videos there. And then obviously there's the premium content.
Okay. Great.
But it's all there.
This is exciting. I know people love to trade options, and especially during the earnings reports. That's all I ever see on StockTwits, what's going on with the options. So
yeah, it's fun. And, I like doing Live Trader because I'm helping people learn about it.
Yeah.
And I get a lot of feedback. It's different from the other services that I do. The other services, it's like, we send out the newsletter. We have our daily summaries. Weekly summaries for Home Run Investor, and then we have limited contact with people, and it's just kind of there, right? But with Live Trader, it's not just live in the sense that I'm doing it live, but it's also like this living, breathing sort of thing that's changing, right? So people are constantly chiming in the comment section or sending me emails, and then the next show I'll say, oh, hey, I got an email about this, so I'm going to talk about this. And then I'll be able to explain a little further any questions that people have. And then we also get input from people as to what stocks they want me to cover. Okay. So it's cool. It's like malleable, and it morphs, and so it really is live in more ways than one. So it's fun. I like it.
Okay, good. So Sunday, all your requests.
That's right. Live Trader at Zacks.com.
Right. He's open to listening to all those. Okay. So let me just list those tickers again. Google, GOOGL, I guess it is now. NVIDIA, NVDA. Compass Minerals is CMP. Kansas City Southern, KSU. We'll put CSX in there. CSX. And then Delta is GAL. So if you want to check out any of our other podcasts, definitely you can find those on iTunes or on SoundCloud. I'll have the link to the other podcasts on options in there as well, because that's a good refresher on how to do the actual options parts for beginner traders. And we're going to do one on, the more advanced strategies you can be doing over there. All those things I always hear about, the condors and I don't even know, all those. We're going to talk about those. So be sure to check that out in the next couple of months. So for everyone here at Zacks, I'll see you again next week.